the Bureau of Transportation Statistics webinar series, Behind the Numbers. Today's presentation will be by Jeff Gorham from the Bureau of Transportation Statistics, OAI, and Jeff Pelletier as well. The topic of the webinar is airline financial data. The purpose of the webinar series is to provide insight into the collection, analysis, dissemination, and use of transportation statistics. BTS on a daily and regular basis provides value statistics for all kinds of fields in transportation. For example, recently BTS has estimated to show that potential operating revenue for the 25 U.S. scheduled passenger airlines in 2016 was $168.2 billion. This is just an example of the type of data that is regularly collected. Jeff Gorham from OAI will provide a background on the financial data collection practices and show customers where they can find the data and how to use it. Following Jeff's presentation, Jeff Pelletier from Airline Data Inc. will demonstrate how his organization utilizes and repackages the data from the customer perspective. With no further ado, Jeff, I turn it over to you.
Thank you, Michael. Good afternoon. My name is Jeff Gorham. I have been working in BTS collecting airline financial data since 1988. Just to give a background of who we are and what and why we do this, back in the 30s, Congress enacted an act called the Civil Aeronautics Authority Act. That created the Civil Aeronautics Authority, which is the forerunner or the predecessor to the Civil Aeronautics Board, the CAB. Its purpose was to regulate and help stimulate the fledgling airline industry at that time. It was actually, prior to that, part of the Bureau of Air Commerce, which was actually part of the Department of Commerce. At the end of the 40s, after World War II, I do believe it was later renamed the Civil Aeronautics Board. And again, it had the same responsibilities to assist the fledgling airline industry, give it a bigger foothold, make it regulated, and just trying to enable it to succeed and thrive. In 1958, Congress enacted the Federal Aviation Act, which created the FAA. The FAA then took over most of the operational aspects of what the CAB was doing, regulating or approving routes, airline routes, regulating the airports, standardizing a lot of the aircraft safety, things like that. So that mainly had to do with operational control of the airline industry, where CAB continued to oversee the economic aspect of the airlines. Fast forward 20 years after that, in 1979, they pretty much enacted the sunset of the CAB, otherwise known as deregulation. And within 5 years, or it took a period of 5 years, all duties were transferred to either the FAA or to the Department of Transportation in one office or another. Now, the responsibility for collecting airline financial data and disseminating it fell onto the Research and Special Programs Administration, or RISPA, which later became RITA, and now we are OSTR, Secretary for Research and Special Programs, actually Research and Technology. So that's how we came to be. And at the time, back in the mid-'80s, a number of the CAB personnel were transferred over here as well to do basically the same jobs they did at the CAB. Right now we have an office of about 10 federal and 4 contractors that are basically doing the same work. We not only collect financial data, we collect origin destination survey, we collect market and segment traffic data, we also collect on-time data, mishandled baggage data, as well as denied boarding or oversales data from the airlines. And these are all in various periodical, either monthly, quarterly, semi-annually, or annually. For the financial data, let's see. Michael, can I scroll through the screen? Never mind, got it.
Yes, you should be able to hit the button.
Okay, yeah, these are basically the regulations. We are mandated by Congress to collect this once the CAB had disbanded. The initial one, like I said, it began in the 30s as Civil Aviation Authority. Title 49 of the U.S. Code, Section 329, gives the Secretary of Transportation authority to collect and disseminate airline data. We also have to have safety lieu, which requires us to collect transportation on a global market, and Air 21, which requires us to disclose sources of delay and cancellations experienced by travelers. We also collect data for supporting the U.S. Postal Service for mail rate tenders. They contract out to various airlines to transport mail, and we, the Department of Transportation, or they pay us a set rate for that. A lot of the data is used for various programs within the department. Let me just scroll over. Fitness. The Department of Transportation on an annual basis, goes through an air carrier's financials as well as other operating data and determines if they're still fit to perform air travel, transporting passengers and or cargo. Again, they do this on an annual basis. We have mail rate making, international negotiations for routes and services, the EAS service, the Essential Air Service, basically paying a carrier to go where it's really not profitable to go into certain areas where like bush country in Alaska, a lot of the bush towns, there really is no viable, profitable route going in there, so the department will pay a carrier to do that, to transport supplies, mail, things like that. These also used for airport development, forecasting for air traffic demand, not only Congress, but local, state, regional organizations utilize this data, airports, airport councils. So the data is very useful for a lot of different reasons. Air carrier merger requests, Department of Justice utilizes the data for merger requests. So those are just some of the uses. Department of Energy uses the data to determine fuel reserves. Airport improvement program funds. A lot of that is derived from the how many people in plane or depart certain airports. They will get allocated X amount of dollars based on that to help support their infrastructure. The PFCs for your basic ticket is a tax that is used to help fund some of these programs at the FAA. So again, it's used by a lot of different agencies for a lot of different reasons. TSA and Border Patrol uses demand analysis at U.S. airports and allocate screen personnel based on the volume of personnel going through an airport at any given time. NTSB, the National Transportation Safety Board, conducts risk assessments based on this data. Bureau of Economic Analysis, Department of Labor, Department of State, all kinds of users utilize our data for various reasons. Now, for the financial data specifically, this is everything we collect. Well, this is everything we collect, period, not just financial, but on-time performance, traffic, etc. The air carriers are basically considered or classified as large certificated. That means they have to go through a certification process, by fitness at the Department of Transportation. And they have to prove they're economically viable to conduct air transportation. A large certificated air carrier is an air carrier that operates at least one aircraft that has been certified to carry 61 passengers or a payload of 18,001 pounds. They can have many smaller aircraft as well, and they would have to report statistics on those smaller aircraft. But once they fly or operate one large aircraft under that criteria, they have to report what's called Form 41. And within that category, we divide them into 4 different groups. Group 3, or over $1 billion, means they have annual operating revenues of over $1 billion. These are American, Delta, Federal Express, Southwest, United, even JetBlue, Hawaiian, Frontier. Those all qualify, Alaska, and these are all the forms that they are required to submit to us. The next category is a Group 2, or 100 million to 1 billion annual operating revenues. They pretty much submit the same stuff with the exception of the P7. The next group is Group 1, over 20 million annual operating revenues to 100 million. And they're filing fewer items, namely the P7 and the B7. I will go into each of these here shortly. And then the final group is the Group 1 under 20 million. They report kind of synopsized or summarized forms of what the larger carriers submit. They submit these on a semi-annual basis. The larger groupings will submit on a quarterly basis. In addition to those financial forms, there's on-time performance, 234 and 234.6, for mishandled baggage at the bottom, 251D for denied boarding, the O&D survey, and that tells you the criteria for that, for who needs to report that. We get T100 data, or market and segment data, on foreign air carriers traveling to and from the U.S. There is what's called a T8, which is a report of all cargo operations. And then you have these smaller air carriers who only fly aircraft with 60 seats or less, or 18,000 payload or less. They are called 298C carriers or small certificated or commuter carriers. They will report a synopsized version of the financial data in an F1 and what's called an F2. A 291A, which is no longer really being utilized, is the summary of financial and traffic statistics for domestic all cargo carriers. I think the last carrier that ever submitted one of those was ABX, Airborne Express, back in 2004. And then we have F-183, which is the report of political contributions from air carriers. So these are everything pretty much that air carriers are required to report to us, either on a monthly, quarterly, semi-annual, or annual basis. Okay. This is specifically what each of these forms are made of. We have a certification, which an officer of the company has to sign to certify that everything that he submits to us is correct, to the best of his knowledge. We have balance sheets. We have an airframe and engine acquisition or retirement, which adds or deletes aircraft and engines on a quarterly basis. We have a statement of cash flow. We have an inventory of airframes, which is an annual filing. We have a monthly interim operations report, which will provide full and part-time employees on a monthly basis. A statement of operations, otherwise known as an income statement. That's quarterly. We have a notes, which is not unlike an SEC 10K or 10Q, basically just explaining anything out of the ordinary that's going on with the financials to help understand them. We have a P5-1 and P5-2, which are aircraft operating expenses. This will list pilot salaries, maintenance, either in-house or outsourced, any kind of depreciation. This is by aircraft type, and they're all lumped together by aircraft type. We also have expenses by objective grouping, a P6, expenses by functional grouping, which is only by the large carriers. It's just a different way to represent the same data. We have an annual employee statistics by labor category, which gives a breakdown of a number of pilots versus flight attendants versus mechanics versus cargo handling personnel, etc. And last but not least, a monthly fuel cost and consumption report. And I was hoping I could expand this, maybe not. Guess not. This is the quarterly balance sheet, which is submitted by air carriers that have at least 20 million annual operating revenues or higher. So you'll get this from Delta, American, United. You'll get them from Air Wisconsin, Endeavor, GoJet, Mesa, PSA, and you'll also get it from carriers like Asia Pacific, Avjet, Eastern, Kaleida Air Charters, carriers like that. It's a basic balance sheet, and a word of note on our chart of accounts. We have a strict set of chart of accounts which is reflected and explained in detail in 14 CFR Part 241. That is basically the Bible or the authority for air carriers reporting data to us. It will define each line item or account on the financials as well as O&D and the T100 data. And one disclaimer is that just about all the data that we collect, that you see, the accounting structure, was derived in the 60s, and it was basically taken from a 1960s or a 1960 Pan Am chart of accounts. That's where we derived ours from. Over the years, it's been modified briefly here and there. The last time was in the late 80s, I do believe, but it's pretty much rigid. Unfortunately, it has not kept up with the real-world accounting. You're going to notice on this balance sheet there is no line item for other comprehensive income, nor on the income statement. And some of you may be aware of a recent pronouncement, well, not recent, back in 2014, but it becomes effective in 2018, where businesses, and specifically air carriers, are required to classify their ancillary revenues as regular passenger revenues. So from an SEC standpoint, you will not see any kind of ancillary revenues reflected on their 10K or 10Q. It will all be included in their passenger revenues. We have not adopted this pronouncement, and we will continue to require carriers to break out their ancillary revenues separate from their passenger revenues. We have been given this authority to sway from GAAP. Once deregulation hit in 1984, we adopted GAAP, General Accepted Accounting Principles, as a viable format to follow. So any time FASB, the Federal Accounting Standards Board, issues pronouncements for accounting standards, carriers are required to follow them unless we issue an accounting and reporting directive telling them otherwise. This authority is given to us in Title 14, Part 241. So although the balance sheet and the rest of the financial statements are fairly detailed, they probably are not going to be as detailed as an SEC report. This is the abbreviated balance sheet for the smaller carriers, the under 20 million, or the 20 million and under annual operating revenues. Most of the line items have been synopsized, combined. So instead of maybe 60 line items, there's only about half of that. The monthly interim operations report, the P1A, is where we get our full and part-time employees from at the very bottom. It also provides a monthly kind of a total operating revenues, operating expenses, profit or loss, net income, things like that. That data is held confidential until the quarterly data, the quarterly P1.2 or the income statement comes out, which overrides any of the monthly data. This is basically just a snapshot at the end of the month, not unlike what a CEO or a controller would get from his accounting department to give him an idea of the direction that the company is heading. This is the monthly or semi-annual, again for the 20 million annual operating revenues or less. It's a very synopsized income statement. Gives you the operating revenues, passenger and other, scheduled versus non-scheduled, transport-related other, operating expenses, again, very abbreviated, synopsized. This is the income statement for the larger carriers, a little more detail. It breaks out similar revenue between mail, property and freight, scheduled passenger revenue, charter passenger, charter property, baggage, cancellation fees, miscellaneous operating revenue, transport-related revenue. We also have a limited amount of operating expense categories. You've got flying operations, maintenance. You got G&A. You've got promotion and sales. Then you got below the line for non-operating income and expense. This is mainly interest or capital gains. It will show income taxes and any extraordinary items or accounting changes, and then again, net income. And again, net income is the bottom line. There is no other comprehensive income. For a comprehensive income bottom line, again, we don't keep up with GAAP or follow to by the letter. This is an abbreviated aircraft operating expense. It will list by aircraft type, such as, say, 737-800s, all lumped together. If they have 10 of them, they will lump them all, sum them all together, as opposed to, say, 747-400s or 767-200s. However many they have, they will all lump them together as one aircraft type. And for that, you'll get the pilot costs or their salaries. This will include their base salaries plus any leave entitled. You've got fuel and oil expense, and then you have an other. It's very synopsized. You'll also have maintenance and depreciation by the aircraft type, and at the very bottom you will have any airborne hours, total, aircraft days assigned, and fuels gallons issued by aircraft type. And again, these are total for that particular type. The P52, P12, hold on here a second. There we go. P52 is a more detailed version. It's going to break out the pilot's salaries and any of their fringe benefits included. You've got aircraft fuel and oil as well, taxes, pension benefits, etc. You also have maintenance, in-house and outsourced, and how much it costs for the supplies, etc., the parts. You also have the depreciation, airframes and engines, and again the airborne hours, the days assigned, and the fuels issued for that particular aircraft type. Going back, we have a monthly fuel report, P12A, which will give the gallons and the cost, total gallons and total cost for a particular region that the carrier flies, either within Alaska or domestically outside of Alaska. And these are broken down between scheduled versus non-scheduled services. Then you'll have Atlantic versus Pacific versus Latin America. And again, that's broken down between scheduled and non-scheduled. We get our cost per gallon statistics from this report. The quarterly P6 by objective grouping will list salaries for general management, flight personnel, maintenance labor, any benefits and pensions, things like that. You're also going to get the aircraft fuel and oil costs, which should tie with the P52 fuel and oil summary. Passenger food, if there's any, services purchase, whether it's communications, advertising, anything like that. Then you've got landing fees, depreciation, amortization, other. And we also have an expense by functional grouping. It's just a different way of representing that same data. A lot of the line items here would be the same on the P1 or the P6. You've got G&A, you've got reservation and sales, um, traffic servicing expenses, passenger serving expenses, either broken down between just a couple of categories, and that's submitted by the large or major carriers only. We have an annual P10, which is the employee statistics by labor category. This is submitted on an annual basis, and it will, again, represent the number of employees on an aggregate average, broken down between management, pilots, flight attendants, maintenance, passenger handling personnel, cargo handling, bookkeeping, etc. The way we drive, or the way we tell the carriers to drive these figures, is to add up all the, we'll go for, let's say maintenance personnel. They will add up all the hours for their entire maintenance population personnel, full and part-time, and then divide by 2080, which is the number of hours in a year, working hours. That's a 40-hour work week multiplied by 52 weeks. Comes out to 2080. And that's how we get that. Okay. Before we go into questions, let me see if I can find where you can locate where to find this data. Again, this is the, like I said, the authority for collecting airline aviation financial data, as well as O&D and traffic. It's Part 14, or Title 14, Part 241. You can access it through the GPO, Government Printing Office. You may be able to download it as well, just off of various sites off the internet. I did not list that here, but if you go to www.transtats, transtats.bts, Bureau of Transportation Statistics.gov, once you hit that website, on the very left in gray under mode, you will see airline information. Once you click that, then you will get various categories, either financial, traffic, I do believe O&D, on time. That's where you can access our data from. It is updated or posted at the end of each quarter or month, depending on how frequent the data is. Usually the quarterly data is posted about 45 to 60 days, no more than that, after the end of the respective quarter, roughly about 60 days. Monthly, it's usually about 2 weeks after the fact. We normally get revisions from air carriers and restatements from past periods. And in any case, the Transtats database is updated every month with the most recent and available data that we have from the air carriers. I want to say it's posted on the third Monday of the month. I'm not sure. I would have to confirm that. But we do post updates every month periodically for either monthly or quarterly or even annual data. And now I would solicit any questions.
If anybody has any questions, they could either hit *6 on their phone or submit it via the chat pod on the bottom left corner of the webinar window. I see a couple people typing. We'll give them a second there, Jeff.
Okay. However, I did not turn it over to Jeff from Airline Data as far as his uses. I probably should have done that.
Yes. So I'll set that up now, Jeff. If you can start sharing your screen. In the meantime, Jeff, if you want to answer that question, Stan is asking about the presentation and if you are okay with sharing it, which we can do through this webinar as well.
Right. Let's see here. Airborne hour IDs off to, on, or out to in. I'm not sure what you mean by off to on. Yes, they are off to on, so it's basically wheels off and wheels on. That's what's considered as airborne hours. Okay. Now to continue with Manolo's question, if you wanted block hours, which is basically departing the gate at one point and arriving at the gate at another point, you would get that from the T100 data.
You see another question there from Lee Deng, Jeff?
Yes, we do put out a notice or reporting directive every year for carrier grouping changes. They do change from year to year, as carriers do tend to go from one boundary to the other. Either they're making a lot of money or they're losing a lot of money. We usually base it off of 12 months of annual operating revenues ending the second quarter, or June 30th. We will take 12 months ending June 30th. And depending on where they lie in there, if it's over the 1 billion, under the 1 billion, over the 100 million, below the 100 million, et cetera, we will come up with a reporting directive to reflect that grouping change and instruct the carriers to report their new groupings accordingly. We do publish accounting reporting directives for the public as well as the carriers, and that particular reporting directive as well as others are located at www.bts.gov. Once you get to that website, you will click on the Airlines and Airports link. And then from there, you will go into Regulations link. And then it should provide links for reflecting reporting directives. This question from brakes released, doors closed, etc. Each of these are at a different time. Okay. Sleeping the gate defined more specifically. One full wheel rotation, brakes released, doors. There is a reporting directive on that BTS website that I just gave. On-time performance. I think we just put one out. It's technical directive number 27. I do believe it gives a number of different criteria, either when the brakes are released, the doors or are closed, whichever is the most accurate for a carrier to report. Any of those can be utilized for on-time performance. If you want more detail, please check out that technical directive number 27 on the BTS website.
Great. Thank you so much, Jeff. If there are any further questions, we can kind of get back to them after Jeff Pelletier's presentation, how organizations use the data. Jeff, whenever you are ready, feel free to start off. I know we see your bottom right screen, but the presentation is in the background.
How's that? Is that better?
Yes.
Okay.
Yep.
Okay. All right. Well, good afternoon. Thanks, Jeff and team. So my name is Jeff Pelche with Airline Data Inc. And I was asked to partner with Jeff Gorman's team to go beyond just the numbers and actually kind of give a little bit of insight as to how the organizations use this data. So what this will not be is this will not be a demo. And I'll tell you that right now. We're not going to demo any product. I'm just going to give you some insight. But if during this time, if you have any questions or any thoughts, either reach out in the chat bot or send me a note offline, and I'll be glad to follow up with you. So as you can tell from Jeff Gorham's presentation, there's a lot of data in the Form 41, hundreds and hundreds, over 350 different accounts, over the 8, 9, 10 core different schedules. And with that data, obviously there's a lot of idiosyncrasies. There's with those various accounts, so you can slice it, you can dice it, and you can analyze those numbers in hundreds, if not thousands of different ways. And it's just a matter of really understanding what do you want to do. Sometimes a summary is all that you need, and you don't need to churn through pages and pages and pages of data. You need a single number on fuel burn, or you need a single number on net revenue, or maybe the operating expense when it comes to aircraft maintenance. So sometimes understanding you just need a summary, and how to get to that summary is the best way to do it. Or where I'm going to spend a little bit of time is talking about where the answers may come from merging different schedules or merging different accounts. A lot of the data comes in, as you can see, very flat, sort of the balance sheet, the income statement, the P6, the P7. There's tons of value, though, when you look at joining across those different accounts to really get into some different types of metrics. Summarizing large data sets is usually one of the first things that we will do, and I've seen a lot of people do. We looked at the balance sheet a little bit with Jeff Gorham, and that detailed balance sheet, as you saw, has over 80 different accounts on it, where, as mentioned, hasn't really changed in many, many years. It doesn't really grow, it doesn't really shrink, but a properly summarized balance sheet, forgetting the B 1.1 for the small carriers, you could summarize your balance sheet and down into about 50 accounts. And while it may not sound like a lot, getting those 30 accounts out of the way by rolling them up into similar posted accounts sometimes, or most of the time, give you those questions. Sometimes you can also say that of, for example, the income statement, whether it's, you can look at the detail of the summary. There's also value in standardizing that to more of an annual report format. So those of us on the phone who are data geeks and love diving through the data, that's great to have a detailed summary, but especially for those non-industry leaders like maybe your boss or the board of directors, annual report formats are another great way to summarize that data into something that can be more easily consumed by users in the industry or even outside of the industry. So jumping between detailed, summary, and even standard-based reporting is a great way to making sure you get your message across and not waste a lot of time. So, for example, as I've kind of already alluded to, you can try to at least look at the balance sheet, and I know the screen may be a little small, but on the left-hand side there, that's just the assets of what could be a simple balance sheet. We're already entering 70-plus rows of data, and that's just for one airline in the system. But then if you focus and actually roll it up, you can get into a summary-based balance sheet where you get, 60 or so lines, but that is the full balance sheet. So being able to dissect your balance sheet in 60 lines versus just your assets that have already grown to 70 rows of data, pure value in actually trying to roll that data up, but more importantly, doing it properly. Because not every account can combine into another account. So you need to dig into that a little more and have spend some time making sure you map those detailed accounts into summary-based accounts. So there's one idea that you can use to get to what you need to, and how a lot of our users, a lot of our clients have dived into this data. So they'll jump into the summary-based data to start off, and then dive into the detailed data more if they need some additional information. But the summaries, they go just beyond the number of rows. Yeah, it's a 70-row balance sheet or a 50-row balance sheet, whatever the case may be. It goes beyond that, and when you go beyond just the balance sheet, as Jeff mentioned, you get into entities, you get into equipment, and those two can be rolled up. You roll up those entities between domestic and Atlantic, Pacific and Latin. You can get those and you roll them up into one massive entity. Why should you have to go across and add up the Atlantic and the Pacific and the Latin all together? By building a proper, summarized, rolled up entity, you can get to that company number without having to go and manually do all that work. It gets a little more complex, and when you consider operating expenses where the equipment is part of the game, and talk about the 747 or the 737, but it's still an option where you can roll that data up and say, you know what, I don't care about the 737, the 737-800, and the 900, and whatever the case may be. You can roll it up and just say, give me everything, give me all of the equipment. I want all of the fuel for the equipment across the entire operation. So you don't always have to use the lowest level of information. It all boils down to effectively and accurately rolling up that data. You need to get to your point, you need to save your time and move on. Because I think all of us can agree there's not enough hours in the day sometimes to do what we need to do. So getting to the point and moving on is usually the best way to go. So taking it a step further, with those 350 different accounts, and I alluded to this at the beginning, there's a lot of cool data to be found in here, and there's a lot of really interesting metrics you can pull together, but the valuable stuff isn't always just going to jump out and say, here I am. It's not going to be that easy, and if it was, we would be moving on to other things. So what we've done at Airline Data Inc. is we've dug in and we've helped find some of that valuable and cool information. And as I promised, this is not a demo. This is just an overview. And if you're interested in understanding these numbers more, feel free to reach out. So some of the things you can go beyond just looking at the accounts. You can get your average number of aircraft, or you can get your average stage length using, for example, the mileage and the departures to figure out how far is that length of haul going. Dive in a little deeper and you get into some of the analysts' dreams, do some really cool financial ratios. You can do over 4 different schedules. We've come up with 27 different financial metrics in one spot. So rather than running 4 different schedules worth of data and tons of rows, you can get down and just boil it down and join those 4 schedules together and get a cool number of metrics. The fuel stats is something that we see a lot of our clients going after and a lot of our users. There's a lot of value in understanding how much that fuel is costing across 3 different schedules. You can get up to 15 different fuel metrics to help in your analysis and whatever you're trying to review. Maintenance and flight operations, 3 different schedules. You can get over 50 different metrics of information measuring across length of time, average cost, et cetera, et cetera. So there's tons of information in the maintenance and flight ops. And then passenger load factors. It's just as it seems. It comes out of the T2 data, but it gives you that lovely magic number that everybody loves to work with, is that load factor. You can get it from the T100, for those of you who are familiar with the T100 data set, but you can also get it from inside the Form 41. Another common item is the RASM-CASM. You get some revenue and some costs per mile. You need to go across 3 different schedules to get that, but you can do that, and you get about 15 different RASM-CASM based metrics. Really interesting stuff. And then if you get into T2 data, you can get 12 different data points of key information off of 30 or so different accounts. So it's focusing in there to get to really what you need. And then finally, some yields and costs per ASM or per RPM. 2 different schedules of information you need to dive across to pull that out, but all in there, all really cool information if you know exactly what you're looking for. So I didn't want to take up any more time, as I know we're running close to the end, but if there's any other questions, you can either reach out to me or just throw it into the chat box in the bottom right-hand corner. I'm going to kill my screen here so that we can see the chat box properly. So I'm going to stop sharing here. Jeff or Michael, if you have anything.
I just wanted to also add that if anyone needed to contact me, either sometime in the near future after this presentation, I can be reached at jeff.gorham, G-O-R-H-A-M, at dot.gov. And we'd be more than happy to answer any of your questions at a future date, if not now.
Yeah, and for those who didn't see it, my email is really simple. It's just jeff@airlinedata.com. And so from my perspective, I know Jeff Gorham, I'm not sure about you. Stan's asking if we'd be willing to share our presentation. I have no problem sharing mine. So Michael Green, if you want, I'll send you mine and you can facilitate that. But I have no problem with mine being shared.
Yeah, that's no problem on my behalf either. At the end, what we'll do is we have recorded this presentation, so we will send out a link as to how to access the presentation to everyone that registered. So we have everyone's email addresses through the Eventbrite registration process. And included in that email, I'll make sure that Jeff, your presentation in there too, and Jeff Gorham, if it's okay with you, I'll include your presentation as well.
Okay, great. Yeah, and again, if anybody needed assistance in finding the data on the website, whether at Transstats or just bts.gov, I can assist as well for that. Are there any further questions at this time?
And if you want to talk on the phone, please hit *6. Otherwise, the chat pod is also an option for submitting questions. We'll wait another minute or so, and then we can wrap things up. Maybe we can wrap things up.
Okay, what does this say? So guys, here's some out.
I think, Jeff Gorham, that's a question for you.
Okay. Okay, for block hours, those can be found in the T100 data. The financials report airborne hours. The block hours are reported in the T100. And again, that's on a monthly basis, whereas the airborne hours are on a quarterly basis through the financials. But you should be able to find that in the T1 segment data, I do believe.
Yeah, you're correct, Jeff. So they can either reach out to either Jeff and one of us will be more than that.
Sorry for dropping off there for a second. I assume that the question was answered through the chat pod?
Yes, we got it.
Yes.
Great. There are no further questions in the chat pod. I think we can close out if it's okay with both of you, Jeff and Jeff. Again, thank you everyone for participating today. I had a pretty good turnout. Especially thank you to Jeff Gorham and Jeff Pelletier for taking the time out to review how each of you are using the BTS financial airline data. Like the presenter said, you can reach them out to their individual email addresses, which will be available in the follow-up email. Or if you have any questions about the webinar itself, you can give me an email as well at michael.green@dot.gov. With that, that is the end of our presentation. Thank you, everyone, and have a good day.
Thank you.
Thanks, everyone.